How's it going, everyone? It is Andre Williams, and today we're going to be talking about Senseonics. You guys know how much I actually am very interested to see what this company does, not only for the medium, but also the long term. When it comes to diabetes, that is something that runs in my family, and I also have the potential to catch it as well. So that's part of the reasons why I'm very interested to see how well Senseonics actually does. So to give you guys an update, because we have a lot of volatility going on in the market, I just want you to feel more confident in your investment and also in the company in general with all of the volatility. We've seen a lot of pullbacks, so I think it's very important that we know what those support levels are and what the resistance levels have been during this time. It will give us a more informed decision and also can give us an idea of what we can look forward to when the market begins to recover. So what I'm going to be doing in this video, we're going to be doing a quick technical analysis, and then I'm also going to be going over an article that's giving both a bullish and a bearish perspective on Senseonics. And the great thing about it is great for the overall outlook and to give you more better understanding, so you may end up having more conviction in the trade itself or in the position itself. But anyways, I won't waste any more time. Let's get right into it. All right, so we're going to go over this article quickly that was about Senseonics. So own a few shares of Senseonics holdings to wager on life-changing technology. It's been called a meme stock, but prospective SENS stock investors should know that it's no joke. Sometimes I have the opportunity to recommend investing in companies that are truly trying to improve people's lives. Today I'll be announcing one of those companies, Senseonic Holdings. So if you're interested in owning a stake in a company that you can feel really good about, you might want to consider SENS stock. I'm not advising that you load up on this stock. However, after learning about Senseonic's path to regulatory approval of its potentially life-altering medical technology, you might be motivated to take a small bullish position in the name. The problem is that some folks want to take a dismissive attitude towards SENS stock. Maybe that's because it's technically considered a penny stock defined by the SEC as a stock that trades under $5 per share. On top of that, M. Corey Goldman called it a meme stock, which isn't exactly a compliment. That's a real shame, as I firmly believe that both the company and the stock deserve more respect and consideration. A closer look at SENS stock. First, let's see if we can paint a picture of Senseonic's price action during the past year. What's undeniable is that the stock is capable of moving very far very quickly. At the end of 2020, the stock price was still under $1, but that changed dramatically earlier this year. In mid-January, the bulls charged ahead forcefully, driving the SENS stock price all the way up to $2.85. Yet that wasn't even the end of the bull run. By February the 16th, the share price reached a 52-week high of $5.56. I don't typically recommend chasing stocks after moves of that magnitude, as the retracement to the downside is practically inevitable. Predictably, SENS stock cooled off and landed at $3.17 on March 12th. So if you've been sitting on the sidelines on this name, you have an opportunity to get in at a more favorable price point now. Taking into consideration that this was written not too long ago and the price that they mentioned was at $3.17, and looking at the current price right now, it's definitely in a buy zone. Let's continue. I should also mention that Senseonic's trailing 12-month earnings per share is around minus 77 cents. The company's long-term shareholders will definitely want to keep an eye on its EPS in the hopes that it will turn positive in the near future. A truly unique product. Senseonics is a medical device maker, and its main product is its continuous glucose monitoring system called SENS. Before you consider investing in Senseonics shares, I would encourage you to thoroughly read the company's investor presentation. It will give you a sense of what makes SENS unique and how it can have a major positive impact on diabetes patients and other users of CGM systems. Just a list of first and only features should impress any prospective investor. In particular, among the CGM systems, SENS's unique features according to the company include a sensor that's MRI compatible, lasts for months instead of just days, a transmitter that's removable, does not require self-insertions, an implantable sensor, a fresh adhesive patch that's gentle on the skin, on-body vibe alerts for hypo and hyper warnings, and 8.5% mean absolute relative difference. Just a meme? Look, I'm not offended by Goldman's calling SENS stock a meme stock. He's just reporting on the Reddit-fueled short squeeze frenzy of 2021. Yet I don't believe that Senseonics shares should be lumped in with other high-flying stocks. The company has a perfectly viable business, and any increase in its share price is justifiable. Importantly, Senseonics has achieved a number of regulatory milestones with SENS, and it will continue to do so. For example, in 2019, Senseonics was granted MRI compatibility for SENS by the FDA. MRI compatibility was also granted for SENS by Europe's conformity of the Europenny CE in 2020. Moreover, this year, Senseonics anticipates approval from both the FDA and the CE of its new 180-day sensor for SENS. The bottom line, just because SENS stock made a sizable move in early 2021, it doesn't necessarily mean that it's a meme stock. It's time for the investing community to take Senseonics seriously because the company is achieving significant milestones and offering the promise of improved outcomes for patients. Alright, so we're going to be doing a technical analysis for Senseonics really quickly. So what you see right here in front of you is the 5-day, 5-minute chart. So we want to take a look at how it's been performing as of late. So just like many other stocks, we are going through a correction. And we could see we ended up seeing a high over here at $3.40, which was back on March the 19th. And then we have a low over here of $2.41, which was on March the 25th. Most recently on Friday, it ended up finishing the day at $2.75. And we saw lows of $2.60. And we saw it had a high over here right over at $2.85. So this is definitely an area of resistance we like to see Senseonics actually end up breaking so we could see a move to the upside. But as far as where it is currently, I'm going to be showing you guys actually a bigger picture, what I feel is very important for you to know and be aware of, especially if you are a shareholder or you've been thinking about it. So if we take a look right here at the 3-month 1-day chart, this is a great way to see how well it's doing in regards to the trend. So we can see we had quite the run up since it started running up back in December, making some strong moves. You can see right here, January, another strong move. And we had another strong move over here on February the 17th, where it reached a high of $5.56. When we were right in the meat of the correction, where it was actually worse than where a lot of stocks actually had dips around this particular time, we saw here it tested right here at 250, had some support, even getting down to a low over here, as you can see at $1.91. So as the market has been kind of picking itself back up, we could definitely see it's holding its own right at this $2.50 area of support. So if we're looking at adding to our positions, or maybe you're thinking about doing a position, you really can't go wrong anywhere in the $2.40 area. If you're going any higher than that, I would definitely say, you know what, practice some patience and use a dollar cost averaging approach so you could take advantage of some dips. Another thing I wanted to show you guys why it's important for it to pass this $2.85 resistance area. If we can get right past it, you can see quickly we can start making a move to $2.90 and then getting back to that $3 range. You can see right over here, even from the 21-day EMA, it's set at $3.05. So that's why I was saying right now where the current price is, it's actually pretty fair. And if you can get it in the 240s, then that's a pretty good deal. You can even take a look at the RSI down here, and it's just around 44. We already know 50 is right in the middle. So like I said, you're getting a little bit better than fair value. But if there is a pullback into the 240s, it's definitely an area to think about if you do believe in the company, or if you're just looking for a swing trade opportunity. I mean, when the catalyst comes, which I'll be going over in the article, but to give you a quick synopsis, this is on their 180-day SENS system. So that's to kind of give you a quick idea as far as the price action, what's going on and so forth. So for my final thoughts on Senseonics, I am still bullish. We don't really talk about that many penny stocks on this channel, but one thing that I could say about Senseonics, I have very high conviction. Of course, if you have the stock as well and you're having issues with the volatility, then this may not be the right stock for you, because you got to think about your mental health overall in general, especially with the market conditions that we are having. That also makes me want to put in the disclaimer. I'm not a financial advisor, and this isn't financial advice. So just know when you do invest, you're doing it at your own risk. This is also another reason why I say you should have even a stop loss as well, because with penny stocks come a lot of risks. And if you want to minimize that, then having a stop loss is great. And also when the stock does run up, having a trailing stop is a great way to also protect your profits. And this is definitely applicable to anyone who's looking at Senseonics and doing swing trades or short-term trade opportunities. If you believe in this company long-term and you see growth, then this should not be an issue to you, and these opportunities of the low prices that we're currently seeing, hey, you should be thinking about adding or actually just putting more into your position. And if you've been thinking about it, I think the current prices right now and then looking out for those pullbacks like we covered would be a great opportunity. Hope you guys enjoyed this video, and we'll talk soon.